This episode is brought to you by Mortgage Workflow Partners and the Mastering Encompass series, both for users as well as administrators. You can find out all the information about it over at masteringencompass.com. Also, if you'd like to check out what we're doing on YouTube, go ahead and subscribe to the channel using the @MasteringEncompass handle. And make sure you stay up to date on all the information, not just with podcasts, but also video content that we bring to you as often as possible. Now let's get on to the episode. Hey everyone, Larry Bailey here to bring you another installment for a weekly newsletter read through. Today I am in a special location. I'm actually in New York City, downtown. Behind me is not a virtual screen there. It's actually really looking out the back into downtown Manhattan. The great news is we're actually heading over into New York Stock Exchange soon to stand on the floor to have the bell ring and close it up, and that's a big deal for a lot of folks. I'm certainly excited for that. But more importantly, we're there for the Partner Advisory Board. We're meeting with ICE Mortgage Technology both today and tomorrow. And the great news is it gives us a chance to actually do the community meeting live from the New York Stock Exchange tomorrow. Always join us. It's every Tuesday at 4 p.m. Eastern. And tomorrow's show will be special. Hopefully we can pull it off, because tomorrow's show is all about finding and keeping money in your workflow. And where else better in the world to do it than the financial capital of the world, especially at the New York Stock Exchange in Manhattan. So let's get into this weekly newsletter. Now, today's August 12th, 2024. We're going to go through the week of August 5th in review. And so the latest home price indexes showed that wealth creation opportunities remain in home ownership. Plus, there were more signs that the labor sector is slowing. Read on for these stories and more. First story is home price gains still strong. We've been talking about this for a while, and it's just ridiculous how strong those home price gains remain to be. The next story is media misunderstands rising housing inventory, so we'll get into those details. And the last story that we go through is unemployment claims remain elevated. There is a weekly food hack and a food recipe to go through, and we'll get to that as well. So the first story is home price gains still strong. CoreLogic's home price index showed that home prices nationwide rose 0.3% in June after rising 0.6% in May, 1.1% in April, and 1.2% in March. So you see how this trend line's going? As appreciation gains are slowing, but they're still remaining strong. I mean, think about it. And what we found in the data was prices are also 4.7% higher when compared to June of last year. CoreLogic continues to forecast that home prices will rise 0.3% in July and 2.3% in the year going forward, though their forecasts tend to be conservative. ICE, and that's Intercontinental Exchange, formerly known as Black Knight, they're the same company that owns Encompass, by the way, which is why it's called ICE Mortgage Technology. So they also reported national home values rose 0.2% in June after a seasonal adjustment, with their index showing that prices are still going to be 4.1% higher than a year ago. So the bottom line here, gang, is CoreLogic and ICE both, they're not alone. They're not alone in their reporting, as home price gains have also been seen in other major indices like Case-Shiller and the Federal Housing Finance Agency, also known as FHFA. These reports showed that housing still proves to be a great investment for wealth creation. I went into it a little bit last week. Imagine that house that you didn't buy and go see what it costs now versus what it cost this time last year. Chances are it costs more, if it was priced right, of course. So that's why I always say, if you find a house, buy the house. Figure it out. As long as you can afford it, don't wait for interest rates. Get off your, get out of your area where you are and get where you want to be. Find the house that you want and go ahead and get it. Because in spite of what you might be seeing on the news as far as rising inventories, blah, 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 which we're going to talk about in the next story, trust me, depending on your region, it might be scant. So let's get into that story. Media misunderstands rising housing inventory. So it's true, active listings in July rose 5.3% from June and are now up 37% when compared to a year ago. But while some media reports have claimed that the increase in inventory could lead to a housing crash, analyzing the figures in context is always crucial. So the increases we saw last month are from very low levels, obviously. And as active listings are still down almost 30% from the pre-pandemic totals seen in July of 2019, the inventory buildup we've been seeing this year has been very concentrated. As a matter of fact, there's only 4 states that this applies to, and that's Texas, Idaho, Florida, and Tennessee, with higher inventories greater than 5 years ago. So if you are really looking for inventory because you can't find where you're going, maybe Texas, Idaho, Florida, or Tennessee is where you want to go. And good luck for that. So this is compared to some parts of the Northeast, which is where I live. I'm in New Jersey. I'm in Manhattan right now. Those active listings, listen to this, they are down 65 to 75% over the same time period. So yeah, that's why I'm always saying, if you find a place, snatch it up. Otherwise, somebody's going to get it. In addition, seasonal inventory building into the summer months is a normal pattern that we see every year. This is mainly due to children and schools, as parents like to have their move done before the school year. I see it every year. There's a big buildup of listings and stuff like that in the spring and the early summer. People buy the houses because they want to move. I know that's what I did, and that's what a lot of parents do, because they want to have their kids settled into the new school or a new school system before the end. You do not want to get your kids in the middle of a school year if you can help it. So there's that. The next story is unemployment claims remained elevated. So after hitting the highest level of the year, initial jobless claims fell 17,000 in the latest week, with 233,000 people filing for unemployment benefits for the first time. Continuing claims rose by 6,000 as 1.875 million people are continuing to receive benefits after filing their initial claim. The bottom line here is, of course, both initial and continuing claims have been trending higher this summer when compared to the start of the year, with continuing claims topping 1.8 million each week since the start of June. This shows that the pace of layoffs over the last 2 months has picked up. At the same time, employers have slowed down hiring. This sentiment was echoed by ZipRecruiter last week. ZipRecruiter is an online recruiting platform that you can post jobs, things like that. During their second quarter earnings call, co-founder and CEO Ian Siegel explained, quote, "As we look towards the second half of 2024, we continue to navigate challenging labor market conditions. Per the Bureau of Labor Statistics," that's the BLS, in case you've ever heard me say that, "seasonally adjusted hires have declined every month on a year-over-year basis since August 2022. The quit rate has fallen 9% below the average rate in 2019, close quote. As you look at this data, it consistently suggests that we're seeing a steady weakening in the labor market. And that can be concerning or could not be concerning depending on which side of that position you're on. It goes both ways. Here's that family hack of the week, and this is around the 7-minute mark of the video. So if you're listening to this on podcast, thank you very much. If you want to actually watch everything on screen, get 2 places to do it. One is on the Mortgage.community, and the second place is to find us on YouTube using the handle of Mastering Encompass. So search for that. Please subscribe to our YouTube channel. We're seeing a ton of traffic over there because it's easy to get to, so feel free to get to it there as well. What to look for this week, gang? July inflation data will make headlines starting Tuesday with the Producer Price Index, also known as PPI, which measures wholesale inflation. The Consumer Price Index, also known as CPI, will follow on Wednesday. So we got PPI on Tuesday and CPI on Wednesday. Thursday brings the latest jobless claims, July retail sales, and an update on home builder sentiment this month. And then July housing starts and building permits will be reported on Friday. So there's a lot going on here that could swing the market one way or another. Everybody's counting on this Fed rate cut in September. It's priced into the market again. So we'll see what happens. We don't know. My name's Larry Bailey. Again, find us everywhere, Mortgage.community. Subscribe to us on YouTube and always get the information delivered to you right away. Look forward to catching you there. Everybody take care.